That in fact, you did catch up with the MD and CEO, Debashis Chatterjee. So let's listen in to what he had to say.
Yesterday in our commentary, we called out some specific behaviors which we did not anticipate. First of all, the demand pipeline is still very robust. We see a lot of deal activity, quite a few large deals, mostly on the efficiency side. But having said all these things, we were expecting that the freeze that we had in terms of hiring or rather onboarding in some of the BFS accounts, that will ease off. That did not. And even some of the decision making that we expected to happen in Q1, that did not happen. So the delayed decision making, delayed starts, etc., are making us feel that there is a lot of cautiousness still. But I must also say that there is a tremendous confidence that we have in terms of the overall pipeline. So once this freeze goes off, I think we should be back on track. But given the fact that the freeze has taken a long time, it's difficult to talk about the revenue uptake for the rest of the year. And that's why we have given a cautious outlook.
So are we looking at high single digits for the year?
Well, it's difficult to call out right now because we are hoping that the freeze and everything will go off or the delayed decision making will go off in this quarter. But, everybody's guessing at this point of time because we are really, truly living through paradoxical times. On one hand, we have got a strong deal activity. On the other hand, we have a very slow decision making process. So it's difficult to say at this point of time. But what I can say is our aspiration is to have a profitable growth and be in the leader quadrant in terms of growth for the full year.
And what about your margin guidance, 17 to 18%? Is this the exit margin? That means Q4 FY24 or average margins for the year?
See, as far as margin is concerned, it's not a one-quarter phenomena. It's like a process that you put in place. We waited for the merger activities to get over. So we have now rolled back we have again rolled on the margin program that we used to run earlier in the erstwhile companies. And we know exactly how to do it. And we are very confident that, the exit run rate for Q4 should be between 17 to 18%.
So Q4 exit margins for this year will be 17 to 18%. Amongst verticals, DC, BFSI declined 1.3%. Your manufacturing retail also saw a slip. Can you talk about specifically each of these three verticals?
Well, as far as BFSI is concerned, it still grew 12% year over year. So we had a good uptake. I mean, again, the Q1 was predominantly soft for BFS, especially, we have already told you that we had some delays in onboarding, some hiring freezes in some of the accounts. So, but overall, there is enough deal activity. So we are confident that once the freezes go off, we should be back on track. As far as manufacturing is concerned, it grew 14.9% year over year. And again, we are seeing a lot of good activity, good traction in energy and utility. That's something which is part of our manufacturing and resources. And the high-tech media and entertainment, we had a decline in the last 2 quarters. It has bounced back. We had a uptick this quarter, and we see again good deal activity over there. But I must also say that the general pattern that we see is a lot of most of the deals are oriented towards efficiency. And, the objective that the clients have is can you, create the efficiency and can you invest or reinvest the dollars into the transformation or the in-flight transformation that they have been undertaking. And that's a common pattern across the industries.
And retail also declined quarter on quarter.
Well, retail has been soft, retail per se. But if you look at the consumer goods, hospitality, those portfolios are quite robust. In fact, our travel has grown almost 10% year on year. So overall, barring retail, all the other sectors are having a lot of deal activity. Retail has been soft, and this is the one sector which is always impacted with a lot of inflationary pressures, etc.
As of now, you can't call out any kind of recovery in BFSI. That Q2 will look much better than Q1. Do you have the confidence to at least say that?
Well, as far as BFSI is concerned, insurance is doing well. BFS, there's a challenge, as we have called out, in terms of a few engagements in few accounts. And if that does not, ease off, then I think it's difficult to call out. But we are hoping that that will ease off at any point of time. But overall, I would say we are hoping that Q2 will be better than Q1.
DC, what was the loss in revenues compared to your expectations in Q1 because of this freeze in onboarding, etc., that you're talking about in verticals like BFS?
Well, I don't think I would say that it's a specific loss per se, because we knew Q1 will be soft. I think what would have helped us if we did not have the delays in terms of decision making and the freezes, then at least we could have done a better Q2. So essentially, it's not a question of Q2. Q1 is what it is, and Q1 we knew that will be soft. But we were hoping that Q2 could be much more robust. But at this point of time, I can still tell you that Q2 will be better than Q1 at an overall level.
So Q2 will be better than Q1, but not robust, right?
Yeah, not because the type of deals that we're talking about are efficiency deal, cost takeout. So for these deals, you need to close those deals, and it also involves transition. So the revenue uptake happens a little later in the cycle. So that's why it was important that some of the decisions were taken in Q1, so that from Q2, Q3, we see the uptake that is getting delayed. And that's the primary reason why we feel that, we'll still in the leader quadrant, but the whole revenue cycle is getting a little delayed.
Just one final word. This wage increase, which you've planned in July, what will be the margin impact on account of this? And will the increments be on the lower side this time?
Well, I think, I will not be able to tell you more details, but I can only tell you that there are enough exercise that we have done, and we have taken a decision that given the confidence that we have in terms of the overall pipeline and the business, we thought it's important to go ahead with the wage hikes. And this will be in line with the current situation and the current, conditions that we have.
That means wage hikes this year will be lower than the past, right?
Well, I did not say that. I said that depending on the situation that we have done our exercise, and you will get to know it once we do it.
Okay, well, quite a cautious management saying that there is delayed decision making, but there is a strong deal pipeline. They are hoping for a better Q2 versus Q1. That's LTI Mindtree, stock down around 2.6%. We need to take a short